Hello, and welcome to another edition of Symmetry Spotlight, where I break down financial topics and common investment questions with the goal of helping you make sense of the world of finance. It's the end of the year, so it's an ideal time to be talking about tax loss harvesting. So today I'm going to explain what tax loss harvesting is. I'll give you some examples of how it works, and I'll discuss who this might make sense for. Tax loss harvesting is a strategy where we intentionally sell investments that have decreased in value to realize those losses. Now, nobody buys an investment wanting it to lose value, but the nature of investing and having a diversified portfolio is that sometimes it happens, and we can use that loss to our advantage. The benefit of that loss is that it can be used to offset capital gains from other investments, and in some cases, we can use it to even reduce your ordinary income taxes. Here's how it works in practice. So let's say at the beginning of the year, you sold an investment that had $10,000 in profits. If you owned that investment for longer than 1 year, then that profit is treated as a capital gain that normally you will owe a capital gain tax on. Depending on your total income for the year, your long-term capital gains tax rate is either 0%, 15%, or 20% at most. But maybe you have another investment in your portfolio that is dropped by $10,000. If you sell that investment, you will realize a $10,000 loss, which that can be used to offset the $10,000 gain on the investment that you sold in the beginning of the year. The end result, you've neutralized the tax impact of that gain. The proceeds from the investment that you sold at a loss can be reinvested into another investment of your choosing, but you have to be careful of the wash sale rules imposed by the IRS. The wash sale rules state that you can't buy back the same or a substantially identical investment within 30 days before or after the sale, or you will lose the ability to claim that loss. So coordination and timing of this strategy is key. Using that same scenario, let's say you haven't sold any profitable investments this year and you have zero realized capital gains for the year, but you have that investment that has the $10,000 loss. We can still use that to your advantage. If we sell that investment with that $10,000 loss, that loss can pass through to your tax return as an income tax deduction. For 2025, the IRS lets you deduct up to $3,000 in losses against your income for the year. So what happens to the other $7,000 in losses that you weren't able to claim in one calendar year? Well, those can be carried forward to future years to either offset future capital gains, or they can be used again as another $3,000 deduction against your income. So sometimes investors will sell an investment at a loss, not because they want all the advantages in that calendar year, but they foresee future years where they might have capital gains, and they want to realize the losses now to then be applied in the future for them. Tax loss harvesting isn't for everyone, and in fact, this only applies to investors who have taxable or non-qualified investment accounts. You cannot do tax loss harvesting in 401ks or IRAs or Roth IRAs or any other of those tax advantage accounts. Those accounts have other tax advantages that apply to them, so tax loss harvesting is not allowed in retirement accounts. As I mentioned, this takes a lot of coordination, so this is a conversation best had with myself and any tax professional relationships that you have to see if there are opportunities for tax loss harvesting within your portfolio. If you are a current client of mine, I'm looking for tax loss harvesting opportunities for you throughout the year. In fact, we have certain types of managed advisory accounts where tax loss harvesting is one of the core management principles that's integrated into the accounts. But if you want to talk more about if there are opportunities for tax loss harvesting within your portfolio, don't hesitate to reach out to me. We can definitely talk more about that. Otherwise, I appreciate you watching, and I look forward to talking with you again soon.